The Indian market has been through several phases, and the current phase is really a very strong and healthy one. But anyone who's got memories of the earlier phases is going to have a different perception. So if you go back to the 90s, venture capital started to take off in India. And that didn't really do well. It grew and then it faded. And partly it was because it was premature, partly it was because it was, well, the entire ecosystem didn't develop. You didn't go from seed to A to B to C and have a nice full ecosystem so that early stage companies could get further rounds. Partly at that stage, this was before digital tech. And so you're relying on more deep tech and there just simply wasn't enough deal flow. So anyone who went into early stage 90s or early 90s Indian VC didn't do so well. Then the 2000s, from say 2000 until the global financial crisis in 2008, that was a period when growth equity took off, private equity took off big time in other countries and emerging markets. India went down a side path. India went into momentum investing. So basically purchasing shares on the stock exchange at a discount, then writing them up, then waiting till the period when they could sell. That was a fantastic strategy while the share market was buoyant. But the share market, obviously with the financial crisis, didn't stay buoyant. And when that ended, that whole thing fell apart. So there were many on paper, many private equity funds in India prior to the financial crisis. Most of them got wiped out, and that left a very bad taste and a very bad memory. And they weren't actually doing proper private equity. So then you had a sort of intermediate period from the financial crisis through until about 2012, when people were getting used to the idea that momentum investing was dead, and they're wondering what else to do. And India, the obvious thing is it should have participated in that first round of growth of private equity outside the US and Europe in the 2000s, because India's got an incredibly deep bench of management talent and operating experience, which is what you need for that form of private equity and for growth equity. But, you know, having been sidetracked to momentum, that hadn't taken off. But the talent was still there. So once people realized momentum was over, you started to get people putting together growth equity firms towards the end of that period. Now and that laid one of the foundations for the current Indian market. There's two other foundations for the current Indian market. One is just the global spread of venture capital outside the US and Europe. And that was enabled by the advent of digital technology. Prior to digital tech, you needed an ecosystem of laboratories, and the VCs stood outside the labs and said, what have you invented today that I can go and commercialize? And that's a very particular ecosystem. It doesn't exist in many places. With digital tech, all you need are smart programmers, smart engineers. And they exist globally, and they particularly exist in numbers in India. So as soon as that wave of digital tech came along to sort of be the driver of venture capital, India was just sitting in the sweet spot for that growth. And that happened, so it was something, a global event that India was well positioned to take advantage of. Then there's two domestic things, domestic policy. And India is the only country post-2000 to really implement sort of macro initiatives which unify the market and then create opportunity for technical innovation. So the unification of the market of things like GST, infrastructure, new airports, new roads. So this huge, what was a fairly fragmented domestic market now gets more unified. That makes it easier for companies to sell their products to one market. And that stimulated both the opportunity for venture capital and for private equity. And on top of that, you've got the digital stack, which everyone's aware of, which really asks people or encourages people to innovate on top of what's now a unified market. So you've now got three very strong underpinnings for what's a totally new market. And you can see that both in the growth of the market, the fact there's now over 40 GPs on Fund 3 Plus, which means they've shown successful continual performance, and also the fact the market is now producing alpha. The private markets are now outperforming the public markets, as is the case in Europe and America. So the current market from 2012 on is now, I think, a fully functional market with a very deep base, a very deep foundation. It's very different to the sort of intermediate period market from 2008 to 2012, and very different from the preceding market from 2000 to the financial crisis.